what's up guys? Welcome back to Everyday Money. I see all the time on things like TikTok and Facebook and all sorts of other social media posts that a lot of folks say that they cannot afford to buy a home. And when they say that, I assume that they mean that they can't afford a down payment on a home because not a lot of people have several $100,000 to just purchase a new home in cash. So what I want to show you today is how if you don't have any spare money, if you don't have anything at the end of the month after you've paid all your bills and all your utilities and all the things that you pay for, how you can save up for a down payment on a $200,000 reasonably priced home and with just a few adjustments to your monthly budget. Now, first off, I think one of the biggest things that you have to do is set realistic expectations for what you're going to be able to purchase. You may not be able to go out and afford that giant 4 or 5 bedroom house on an acre with a 3-car garage and a swimming pool as your first home. You know, those types of homes, depending on where you are, you're going to be looking at $500,000 or more, and that may not be a realistic expectation. You might want to search for something that is around, upper 100s to $200,000. And what we're going to look at today is a $200,000 example. If that's not possible in your area, if you are in an extremely high cost of living area, the simple fact is that you may just have to look somewhere else. There's a lot of places where there is extremely high cost of living homes, and then 10, 20 miles away from there are reasonably priced homes that you can get into and, get your foot in the housing market, and then you can move up to those over time. For example, the first home that I bought back in 2006 was $140,000 or $165,000, and it was only a small 3-bedroom, 2-bath ranch that needed some work. After moving to another home and to another home and making some money off of those because I had fixed them up and put some money into them, I'm now in a 5-bedroom, 3.5-bath home with a large garage on a third of an acre. But that is because I had chosen to live in relatively lower cost of living areas. If I were to move closer to work, this house that I have now, which would probably go for somewhere between $350,000 and $450,000 in the neighborhood that I am, where I work would be more in the range to $800,000 to $1 million, depending on the location. So you just have to sometimes have realistic expectations about what you can afford and where you can afford to live just to get the whole thing started so you're not setting yourself up for failure right off the bat. And then if you earn more or your house goes up in value, you can sell it and move to that area that you want to end up in the future. So your ace in the hole with this is going to be that you can take an FHA mortgage for only 3.5% down. You will have to pay MPI on that for a period of time, but I'm going to show you quickly at the end of this video how to get rid of that as well. So you're only going to need $7,000 to put down for your $200,000 house. And now there are other fees. If you want to set up escrow accounts and things of that nature, you will have to fund that as well. But we're just going to say for this example that your total all-in cost is $200,000. So what we need to do is break that large goal of $7,000 down into manageable chunks that we can put actionable items to in order to get us to your down payment goal. So let's break that down into a 2-year time period. Let's say you want to have this down payment money in 2 years. So 24 months, we need about $292 a month being saved for this down payment for you to put down on that $200,000 home. So you're going to have to do something. If your income is stagnant and you are spending every dime of it, there will have to be some sort of sacrifice or some sort of increased earning potential for us to get there. But I don't think that it is as drastic as you think that it may be. But let's break down that $7,000 into 24 monthly payments based on some saving and cutting of some stuff and maybe earning a little bit more. So let's start with savings because those are things that you can usually do immediately in order to put some money into your pocket to save up for that down payment. Let's just talk about cutting cable. That is a big one, and cable TV has gotten more and more expensive over the years, as I'm sure everyone knows after they get out of their teaser rate. I looked it up really quick on the internet, and for my Spectrum amount here, if I had cable, they are advertising it for $50 per month, which I'm sure a lot of folks are paying a lot more than that. And if you have premium channels, you're paying even more than that. And there are just so many great ways to get entertainment that doesn't come through cable, because anytime cable is on, typically there's nothing on that I want to watch anyhow. So if you have Amazon Prime already, there's a ton of shows on Amazon Prime. And if you have any other of the streaming subscriptions, there are a ton of stuff you can get there. As well as, you can go to YouTube or TikTok if you really need to just be entertained and really not being productive with that time anyway, which is another great thing about cutting cable, is you can do something else with your time other than sit in front of the TV. So we're going to start with that at $50 a month savings, and that is the start of our savings ladder here. In addition to that, if you have internet that is extremely fast, like 2, 4, a gigabit per second, most people don't need that. Even if you play video games online, 50 to 200 megs per second is more than enough. So take your internet down to the slowest available speed. And again, we're doing this is so that you can save that money in order to get this home that you want. Next up is your cell phone plan. And I'm going to be putting links to videos that tie into a lot of these, and you can click on those to get more detailed information on these things that I'm talking about. Also, if you're into this, be sure to smash that like button. This really helps out this channel and this video. On your cell phone plan, if you are with one of the major carriers like AT&T or Verizon, you are most likely paying way too much, probably double what you need to pay for that service. You can use a virtual operator like Cricket Wireless or a TracFone or something like that. They sound like they might be like shady, crappy versions of cell service and that you're going to have problems, but I use Cricket Wireless. I used to use AT&T. I found out that Cricket Wireless is totally owned by AT&T, and it is the exact same service. So for me, I have 2 lines of service right now. My kids are way too young to have cell phones, so I have 2 lines of service. With AT&T, that would be over $140 per month after taxes and fees and all of that. It's very hard to nail down what exactly that would be for you all out there, because taxes and fees are different everywhere. With Cricket, my service is $70 a month, taxes and fees included. It's essentially unlimited, but it's like 10 or 20 gigs at 4G LTE speeds, and then they would reduce it. I don't use anywhere near that because I'm on Wi-Fi most of the time. So right there, I'm going to say if $140 for AT&T, $70 for Cricket, that is a savings of $70 a month, increasing our total monthly savings now to $120 a month. A caveat to this is you may have to buy out your cell phone installment plan if you purchase your cell phone on an installment plan, so you may have to use some money for that I didn't account for, but your savings per month between these two is $70 a month, bringing us up to $120 that we're saving per month so far. So next up is eating and drinking out. Going to a restaurant or a bar or whatever. And when I did this, I just said you're going to spend about $40 on average going out 4 times a month, which is probably low on both accounts. So the savings for this may end up being much greater than I account for in this. But I was going to say that you're right now spending $160 a month on going out to eat and drink. If you would just cut that back to only going out twice a month, and you ate in, and that cost you $20 per meal or whatever to eat in, that right there is a $40 a month savings, which brings our total savings per month between cable and cell phone and only going out to eat twice per month up to $160. It's likely that you are going out to eat or drink more than 4 times per month, and you're probably spending more than $40 with tips and everything. So there is likely a lot more savings to be found in this line item, but I wanted to do this as conservatively as possible so that I could show you guys how easy it is to save a little bit of money towards that $7,000 that you're going to need for that $200,000 house. Now, next one up is the millennial cliche that they always like to throw at us: Starbucks, or whatever would be representative of Starbucks for you every day. So if you're looking at getting a Starbucks on your way to work 5 days a week, 4 weeks a month, you're looking at about $100 a month that you're spending on Starbucks coffee, or again, whatever. Try not to roll your eyes too hard at me when I'm saying this, because there's probably something that you spend about $5 a day on that you may be able to cut out. So what I wanted to say was go ahead and treat yourself to that Starbucks latte on Friday for surviving another work week. But for the rest of the time, make that stuff at home. So we're still going to spend $20 a month on Starbucks, but we're going to take that from the $100 that you were spending, and that will give us a $80 savings. But there are some materials you're going to need to buy coffee. You're going to need to buy coffee filters and maybe a coffee maker. You're going to spend some money on electricity. So I'm going to account $10 for that, and bringing your total savings for this coffee down to $70 a month, which brings our savings ladder up to $230 a month between the cable, the cell phone bill, eating and drinking out, and Starbucks or whatever it is. And this could be a representation of a pack of cigarettes a day. This could be avocado toast, as Graham Stephan likes to say. It could be anything that you're spending $5 a day on. Snack machines, whatever. If you can just pair that back to like a little Friday reward for making it through another work week, you can save $70 or more per month towards your big goal of home ownership. And then additionally, just look through your bank account. See what money is being spent. See if there are unused subscriptions. There's a lot of times that people will sign up for Netflix, Hulu, Pandora, Spotify, whatever, and then they don't use them, and they might use one of them a lot. Like, for example, maybe just Netflix, maybe just Hulu, maybe just Spotify, just Pandora, whatever. Keep the ones that you use the most. Like, pick one or two, like one video streaming, one audio streaming, or just cut them out altogether. But keep the ones that you use the most and cancel the rest of the stuff. Also, just look through your impulse buys and try to spend consciously, like when you're in stores, and not make a bunch of impulse purchases. But so far, we have $230 of total savings per month on the 4 savings items that I've mentioned so far. And so let's change gears and talk about increasing your income to make up the rest. So we're only about $62 short of our goal of $292 per month for 24 months to get us to the $7,000 we need to put down on that $200,000 home. We've exhausted our savings ideas, so now it's time to try to increase our income. And you only are going to need about a $1,000 per year income increase to have an after-tax amount enough to cover that $62 a month that we need to get us to our goal. So some ways that you can increase your income are just simply asking for an increase. If you've been employed for a while with one company and you haven't received an increase, you may have simply been looked over. A lot of times in the hustle and bustle of the business world trying to make a dollar, the employers will overlook increases for their employees. If you feel like you deserve it and you can make a strong case, go in there and ask for that raise. Ask for a promotion, or try to work towards a promotion to, make some more money for yourself. If that's not an option, try to get a different job. I know that sounds, like, oh, that's, something easy to say. If you're not satisfied with the job that you're in right now, try to look for something else. You may look at an entirely different field, or an employer in the same field that pays more than your current employer does. The one thing I would try to do is to say, try not to work overtime or part-time or a side hustle. If this is money that you need to get just for your basic living expenses, trading more time for money is not what I want you to try to do. But if that's what you have to do in order to get the money for the down payment for your home, then that is just what you're going to have to do. But just try to get more money for the time that you're already putting in. So now that you've got your $7,000 you need to put down on that $200,000 home, you can purchase it, but you will have MPI to go along with that because you've only put down 3.5% and not 20%. And unfortunately, on FHA loans, you can no longer remove that MPI for the life of the loan, so you will have to refinance. The good news is that as you pay down that note and as the building appreciates in value over time, you will likely run into a situation sooner than you think probably that you have under 80% loan to value, and you can go to a bank or a mortgage broker and refinance that home into a conventional mortgage with 80% or less loan to value, and you'll be able to drop that MPI or PMI. In addition, when you are looking for this new home, when you're looking for this $200,000 home and you're thinking, wow, that's going to cost me X amount of dollars per month, consider purchasing a multifamily home, either a 2 to 4 unit building. Finances and insurers is very similar to a single family home, with the exception of you can rent those other units out and cover 100% or more of your mortgage. So you could potentially go from renting to saving this money up and then buying your own home, renting out the other units, and either living in it for free or having enough rent that it covers your mortgage and put some money into your pocket. And then if you do want to buy a regular single family home for the privacy and all the other advantages that single family homes have over multifamilies, you can rent out that unit that you used to live in and buy another home, and that building that you had before could potentially pay for your entire mortgage on your new home, or you could sell that building and then take that money that it is now worth and use it for the down payment or maybe the entire purchase price of your new home, depending on where it is that you live. Again, this scenario that I came up with is essentially the minimum that I could try to come up with that would be the minimum intrusiveness on people's lives. There are much more drastic measures that you can take in order to get that $7,000 quicker. I mean, if you get tax returns, you can use that money. If you get any type of money, like for example on your birthdays or Christmas or whatever, you can use that money. You can cut out a lot of stuff. You can cut out eating out altogether, and that will drastically increase the amount that you are able to save. You can look at what you're paying for your auto insurance, and if you have cars that you're paying on, you can sell those and go buy used cars that you don't have payments on. There are a lot of things that you can do if the goal is for you to purchase that home and you want to make that your big time goal, and that is a very important thing to you. You need to make that very important financially for you to make that happen. That is really all that I can say about that. Is if you want to get to that goal quicker, it's possible, but there are sacrifices that you're going to have to make in the short term to make your dreams and your goals come true. As with anything else in life, there are sacrifices, but as you make more money over time, things will get better, and you won't have to make all those sacrifices in order to get the things that you want. Guys, I hope you got some value out of this today. I hope that gives you people out there that don't think that you have the ability to save up and make a down payment on a home some hope. It is possible as long as you set your mind to it. I appreciate it if you would hit that like button for me. If you like this video, subscribe to this channel if you're not a subscriber already. I appreciate you guys watching today, and I'll see you in the next